Congratulations, you're now the CEO of the largest company in human history. Not the biggest technology company, not the biggest bank, the biggest company ever. Yesterday, your signature approved billion-dollar projects. Today, it can move entire economies. Your company employs more than 10 million people across 186 countries. It manufactures the processors inside smartphones, owns the world's largest cloud infrastructure, builds aircraft, finances infrastructure, operates cargo fleets, produces pharmaceuticals, develops artificial intelligence, and supplies electricity to millions of homes. Every minute, your company generates more revenue than most businesses make in an entire year. If it stopped operating for just 24 hours, global markets would panic. Cargo ships would remain at sea. Hospitals would delay surgeries. Factories would shut down. Governments would declare emergencies. And in exactly 1 hour, you'll make your first decision as CEO. A decision that could create or destroy hundreds of billions of dollars before the closing bell on Wall Street. Everyone says you've reached the top. Nobody tells you what's waiting there. Your first morning begins at 4:45 a.m. Not because you have to, because you couldn't sleep. The phone beside your bed hasn't stopped vibrating since midnight. Tokyo markets are opening. Europe is preparing for business. New York is still asleep, but your inbox already contains more than 2,000 unread emails. Your calendar says your first meeting begins at 6. Your assistant tells you breakfast has been prepared. You never touch it. Coffee will have to do. Outside, helicopters circle your headquarters. News crews have been camped outside since yesterday. Financial analysts are already debating your first move. Some believe you'll split the company. Others think you'll buy another one. A few are convinced you'll fail within a year. You haven't even reached your office. Already. The world has an opinion. The boardroom is silent when you walk in. 24 directors sit around a table worth more than most houses. Some built their careers over 40 years. Some founded companies worth billions before selling them to yours. They're smiling, but they're not your friends. They're evaluating you. Your predecessor spent 18 years building this empire. One bad quarter ended his career. His portrait hangs on the wall outside, a quiet reminder that even giants can fall. Then the chief financial officer begins speaking. Revenue, cash flow, debt, acquisitions, currency exposure, commodity prices, interest rates. 37 countries are experiencing economic instability. 5 major factories are operating below capacity. 3 governments are threatening new regulations. An activist investor has quietly accumulated nearly 6% of the company's shares. They're demanding immediate changes. And this is before lunch. At exactly 9:30 a.m., the stock market opens. Your company's valuation is so enormous that a 1% move changes its value by nearly $100 billion. You glance at the live ticker, up 0.4%, then 0.8%. Analysts like your opening speech for exactly 12 minutes. Then an interview airs. A journalist asks whether you'll replace 20,000 workers with artificial intelligence over the next decade. You answer carefully. We'll continue investing in both people and technology. It sounds reasonable. The market disagrees. Your stock drops 4%. $400 billion disappears. In less time than it takes to watch an episode of your favorite TV show. Nothing about the company changed. Only expectations did. And now every headline reads, "New CEO wipes out $400 billion. You haven't even finished your first day." The following week brings another surprise. A small supplier in another country misses one shipment. Just one. Normally, nobody would notice, but that supplier manufactures a tiny electronic component used in millions of products. Factories begin slowing down. Cargo ships wait for inventory. Retailers delay launches. Customers complain online. News channels call it a global supply chain crisis. Your logistics team works around the clock. Private aircraft deliver emergency shipments. Alternative factories are activated. The crisis lasts 6 days. It costs your company $12 billion, all because of one missing component. Leadership, you discover, isn't about solving giant problems. It's about preventing thousands of small ones from becoming giant. Then come the politicians. One country accuses your company of becoming too powerful. Another wants tax concessions. A third threatens to ban your products unless you build factories locally. Every meeting feels less like business and more like diplomacy. You realize something strange. You're no longer just running a company. You're negotiating with nations. One wrong sentence could change international markets. One misunderstood interview could wipe billions off pension funds. Your words now carry weight far beyond business. They shape confidence. Confidence shapes investment. Investment shapes economies. And economies shape lives. One Friday afternoon, your legal team enters your office. Nobody smiles. A government has officially opened an antitrust investigation. The allegation? Your company has become too successful. If regulators win, the business could be broken into separate companies. Investors panic. Employees worry. Competitors celebrate. For the first time, you wonder whether growing bigger was ever the right goal. Weeks become months. The money keeps coming. The pressure never leaves. You begin measuring time differently, not in days, but in earnings reports. Quarter 1, Quarter 2, Quarter 3. Every 90 days. The world demands proof that you're still worthy of the job. One disappointing report, one unexpected expense, one global recession, and suddenly, the same investors who praised your leadership begin asking for your resignation. The chair you're sitting in never really belongs to you. It's only borrowed, until someone else convinces the board they can do better. The investigation dominates every headline for the next month. News anchors speculate about the future of your company. Politicians promise to restore competition. Your competitors suddenly become outspoken advocates for fair markets. Investors start asking the same question. Can the company survive if it's broken apart? Ironically, the business has never been healthier. Revenue is climbing. Profits are setting records. Customer satisfaction is at an all-time high. Yet your stock continues to fall, not because of what the company is, because of what people think it might become. You learn your first real lesson about Wall Street. Markets don't price today, they price tomorrow, and tomorrow is built on expectations. 3 weeks later, your chief economist walks into your office carrying a single chart. One graph, one line, it slopes downward. Consumer spending is slowing. Manufacturing orders are shrinking. Businesses are delaying investments. The global economy is losing momentum. It's probably nothing, someone says. But experienced executives never trust the word probably. Within 60 days, the slowdown becomes official. The world enters recession. Customers stop spending. Companies cancel contracts. Governments reduce infrastructure projects. Factories begin producing less. Sales fall almost everywhere. Your finance team presents 2 options. Option 1. Protect profits. Lay off nearly 200,000 employees. Option 2. Keep everyone employed, accept lower profits and risk angering shareholders. The numbers are brutally simple. The human consequences aren't. Every layoff represents someone trying to pay rent, someone saving for college, someone supporting parents, someone who believed they had a secure future. You stare at the report for nearly an hour. There isn't a right answer, only different kinds of pain. The board meets that evening. Half the directors demand immediate cost-cutting. The market rewards discipline. The other half disagrees. If we abandon our people now, they'll never trust us again. Everyone around the table is intelligent. Everyone has evidence. Everyone believes they're right. For the first time, you understand why leadership can be lonely. Nobody can make this decision for you. You cast the deciding vote. Layoffs are reduced dramatically. Executives, including you, take massive pay cuts instead. Your annual compensation drops by almost 90%. The announcement surprises everyone. Employees cheer. The media praises your leadership. Wall Street does not. The stock falls another 8%. Nearly $800 billion disappears in 2 trading days. Commentators call you emotional. Some investors call you irresponsible. Others call you a visionary. You realize something else. The same decision can make you both a hero and a failure, depending on who's watching. Months pass. The economy slowly stabilizes. Sales begin recovering. Employees who kept their jobs work harder than ever. Innovation accelerates. New products outperform expectations. The stock begins climbing again. 1%, 3%, 10%. Eventually, it reaches an all-time high. The investors who criticized your decisions now describe them as brilliant. The television analysts who predicted your downfall congratulate your leadership. Nothing about the past changed. Only the outcome did. Success has a strange effect on memory. People forget how uncertain everything once felt. Then comes another problem. Artificial intelligence. Your research division unveils a system capable of replacing millions of repetitive jobs. Customer service, accounting, logistics planning, basic legal work, even software development. The technology works almost too well. Implementing it would save hundreds of billions over the next decade. It would also permanently eliminate millions of careers. Your engineers are excited. Your investors are excited. Governments are terrified. One minister publicly accuses your company of automating society faster than it can adapt. Protests begin outside your headquarters. Employees march beside people who don't even work for you. They carry signs that read, "People before profits." Your board wants immediate deployment. Your ethics committee recommends slowing down. Your shareholders want maximum returns. Workers want security. Consumers want cheaper products. Everyone wants something different. And somehow, they all expect you to make everyone happy. You can't. No CEO can. No company can. Because every business decision creates winners and losers. The only question is, who pays the price? The attack begins on a Tuesday, not with an explosion, not with a warning, with silence. At exactly 8:17 a.m., one of your largest data centers stops responding. Then another, then 5 more. Screens across your headquarters begin turning red. Your chief information security officer doesn't knock before entering your office. "We have a problem." That's all he says. Within minutes, video conferences across the company disconnect. Warehouse robots freeze in place. Payment systems fail. Cargo ships lose access to navigation updates. Hospitals using your cloud services switch to emergency backup systems. Millions of customers can no longer access their accounts. The largest company in history has just been brought to its knees. Your cyber response team fills the emergency operations center. Hundreds of specialists stare at walls covered in live maps and network diagrams. No one is talking about profits anymore. They're talking about time. Every minute your systems remain offline costs nearly $40 million. Not just in lost revenue, in broken contracts, delayed deliveries, customer refunds, emergency response, insurance claims, and reputational damage. A digital clock appears on the main screen. Time. Since outage, 0 hours, 14 minutes, 26 seconds. Nobody wants to watch it. Everyone does. 3 hours later, the message arrives. Not an email, not a phone call. A secure communication sent directly to your incident response team. The attackers claim responsibility. They demand an amount of money so large that it would rank among the biggest ransom payments in history. Pay? Or they will permanently destroy years of critical data. Your executives immediately split into two camps. One side argues that paying ends the crisis. The other insists that paying only guarantees another attack. Every minute spent debating gives the attackers more leverage. You make the decision. No payment. If the company survives, it survives on principle. If it doesn't, at least you won't finance the next attack. The next 72 hours become the longest of your career. You don't leave headquarters. Neither does anyone else. Conference rooms become bedrooms. The cafeteria stays open all night. Engineers sleep beside laptops. Some haven't seen their families in days. Your assistant quietly places clean clothes in your office every morning. She never mentions how tired you look. She doesn't have to. The mirror does that for her. On the fourth day, your systems begin coming back online. One by one, factories restart, aircraft resume production, cargo vessels reconnect, banks restore payment processing, governments breathe easier, customers return, the crisis ends. At least, that's what the public believes. Internally, nothing feels finished. The damage report arrives a week later. $48 billion. That is the estimated cost of one cyber attack. Insurance covers only a fraction. Some clients leave permanently. Several governments launch investigations into your security practices. Shareholders demand accountability again. Just as the company begins recovering, another storm appears. Only this one is wearing tailored suits instead of hoodies. An investment group announces it has quietly acquired almost 12% of your company. Not enough to control it, enough to challenge you. Their proposal is simple. Break the company into smaller businesses, sell the pieces, return trillions of dollars to shareholders. They call it unlocking value. You call it dismantling everything thousands of people spent decades building. The battle becomes public within hours. Financial television broadcasts debates around the clock. Experts draw charts explaining why the breakup is inevitable. Others insist your integrated business is too valuable to separate. Every newspaper asks the same question. Can the CEO keep control? You realize something unsettling. You don't actually own the company. The shareholders do. You're simply trusted to lead it. And trust can be voted away. The annual shareholder meeting becomes the most watched corporate event in history. Thousands attend in person, millions watch online. Outside the convention center, protesters hold signs demanding higher wages. Across the street, investors hold signs demanding higher profits. Both groups believe they're fighting for the future of the company. Both believe you're standing in the way. You walk onto the stage. For a moment, the room is completely silent. Every camera points at you. Every microphone waits for your first sentence. You take a slow breath. Then you begin. Great companies aren't built one quarter at a time. Some people applaud. Others don't move. You continue anyway, because you've learned something over the past year. Leadership isn't about convincing everyone. It's about making the best decision you can, knowing half the room will disagree before you've even finished speaking. The vote is held. Minutes feel like hours. Your future comes down to percentages on a screen. When the final numbers appear, you remain CEO by less than 2%. You won. But it doesn't feel like victory. It feels like borrowed time, because in this job, you're never more than one bad year away from starting over. The morning after the vote, you arrive at headquarters before sunrise for the first time in months. The building is quiet. No television crews, no protesters, no shareholders waiting in the lobby. Just silence. You ride the elevator alone to the top floor. The doors open. Your office looks exactly the way you left it. The same desk, the same skyline, the same leather chair. But something feels different. You realize the company survived. You survived, yet somehow, you feel more exhausted than victorious. Your assistant walks in carrying a folder. "Good news," she says. "The stock is up 12%. 12%. Almost everyone else in the world would celebrate. For your company, that represents nearly $1 trillion in market value. More wealth created before lunch than entire countries produce in a year. Employees celebrate. Financial news channels praise your leadership. Investors call you a genius. You barely react. Because you've learned something the headlines never explain. The numbers never stop. When the stock rises, people ask how much higher it can go. When it falls, they ask whether you're finished. There is no finish line, only another quarter, another report, another expectation. That evening, your daughter calls. She asks a simple question. "Are you coming to my graduation?" You open your calendar. The ceremony overlaps with a summit involving world leaders, central bank governors, and the largest institutional investors on the planet. Your presence is expected. Your absence could move markets. You stare at the screen. 2 events, 1 decision. One will affect trillions of dollars. The other will affect one little girl who only wants her parent in the audience. You choose the graduation. The headlines arrive before lunch the next day. CEO skips Global Economic Summit. Some analysts call the decision irresponsible. Others question your commitment. Television panels spend hours debating whether you're losing focus. Nobody asks why you missed it. Nobody knows you spent the afternoon sitting in the 3rd row of a school auditorium, watching a teenager walk across a stage. When she smiles after receiving her diploma, you realize it's the happiest you've felt in years. No stock chart, no earnings report, no acquisition has ever made you feel that way. Months later, the company reaches another milestone. It becomes the first business in history valued at over $100 trillion. Employees cheer, investors celebrate. Your portrait is placed beside the founders. Business schools begin teaching your leadership decisions. Books are written, podcasts analyze your strategy. People start calling you the greatest CEO who ever lived. It's flattering, but also strange, because they only know the victories. They don't know the nights you slept on your office couch. They don't know the meetings where every option hurt someone. They don't know the anxiety before every earnings report, or the feeling of carrying the livelihoods of millions of families on every decision you make. Success looks simple from the outside. It never feels that way from the inside. Years pass. Technology changes. Governments change. Competitors rise and fall. The company keeps growing. One afternoon, you visit the manufacturing plant where you started your career decades earlier. Most people don't recognize you. The machines are newer. The buildings are larger, but one employee does. An older technician walks over. He introduces himself. He tells you he joined the company 42 years ago. He's retiring next week. Then he says something you'll remember forever. "My children went to college because this company gave me a chance. Not because of the stock price, not because of quarterly earnings, not because of market capitalization, because of a chance." You thank him. He shakes your hand. Then he quietly walks away. That night, you stay in your office long after everyone else has gone home. You look out over the city. Millions of lights stretch to the horizon. Somewhere out there, people are using products your company built, driving vehicles your engineers designed, working jobs your investments created, living lives connected in small ways to decisions you've made. For years, you believed your job was to maximize shareholder value. Then you believed it was to outperform competitors. Then you believed it was to become the largest company in history. Now, you're no longer sure any of those were the real goal, because companies don't exist for quarterly reports. They don't exist for headlines or awards or record-breaking valuations. At their best, They exist because millions of ordinary people trust them with a small part of their lives, and that trust is worth more than any number on a balance sheet. Eventually, you retire. No dramatic farewell, no emotional speech, just a short announcement. Markets react, the stock falls, then recovers. A new CEO takes your chair. The board welcomes them exactly the way they once welcomed you. The news cycle moves on. Business schools begin studying someone else for the first time in decades. Your phone doesn't ring before sunrise. You make your own coffee. You take a walk without security. You sit on a park bench. Nobody recognizes you. A child rides past on a bicycle. An elderly couple feeds birds nearby. The world keeps moving, exactly as it always has. And you smile, because after spending years running the largest company in human history, you finally remember what it feels like to simply be a person. The company was the biggest in history, but the most valuable thing you ever owned was the time you almost forgot to live.